Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. And now on the technicals, we're joined by Chandan Taparia, who's the derivatives and technical analyst, Motilal Oswal, and of course on the research side, we are joined by Gaurav yet again. So hi, good afternoon to both of you. Let's get started. Snehi, Chola Finance is a name that's buzzing away in trade. Tell us what's the news flow here.
Absolutely, Ankita. It's on the back of a brokerage note coming in from Goldman Sachs this morning. They've initiated a buy rating with a target price of 1,786 rupees on this stock, which is quite an upside if you take a look at where the stock is right now. They believe that the market share gains amid a commercial retail upcycle is going to be good for the company. Structurally better earnings growth story is what they're expecting, and they also expect Chola to deliver an EPS CAGR of 33% over FY24 to FY27. They're seeing an improving return on asset profile, robust loan growth driven by market share gains, and the capacity in place for new orders is also something that they are spotting, and new businesses will diversify its loan book. The secure nature of its book is providing high visibility on earnings growth, and they're also seeing operating leverage realization in the new businesses. So quite a bullish note coming in from Goldman Sachs on Chola Finance. On the back of that, the stock is up almost 3.5%.
All right, Chola Finance is something that you have also picked out for us, Chandan. Tell us, what are you seeing on the charts? So that's the news flow that's powering the stock in today's trading session. But on the charts, it has given us some good returns of 46% over the last 6 months. Last 1 month also has been good for Chola. It's been on an up move. Tell us, where do you see the upside?
Yeah, so looking at the Chola Finance, the price setup is quite encouraging. It has given a consolidation breakout on the daily and the weekly chart. In the recent past, we have seen good move in most of the financial names. So I believe momentum could continue with support of 1490. This stock has potential to extend the move towards 1620 kind of level.
Okay, so that's the view coming in on Chola Finance from Chandan. But let's move on. And Gaurav, you picked out Syngene today, and this stock is also holding up pretty smartly in today's trade. Tell us what's boosting this stock today.
Well, yes, Syngene is in focus because DAM Capital recently met with the management of Syngene, and we have some key takeaways from the meeting. So what Syngene's management said is that Biosecure Act can come through early next month, and the maximum benefit for Indian companies may likely to be seen in the small molecule research segment. Other than that, what they also believe is that the innovators have given around 7 to 8 years to gradually shift the suppliers away from China, and this will give enough time to India as well as the company to build up capacities in terms of the new segment which might come from the China's market. Other than that, they have also said that lower biotech funding in the US impacted the business overall last year, but they're expecting growth to resume from the second half in this year, and at the same time they are also maintaining their FY25 guidance despite the soft Q1 that we have seen for the company. On the back of all this, we have already seen that the stock is up almost by 4.5%, and it's still going up, so definitely watching out on this counter.
Gaurav, Syngene is going to be in focus in today's trade, but let's move on, talk about two more counters that are abuzz, and in fact RITES is the one that is doing pretty well for itself. NBCC however has spared all the gains that it collected early in the morning, but RITES also abuzz as of now 2.4% higher. Now RITES has signed a memorandum of understanding with NBCC to explore and undertake a comprehensive range of consultancy fee-based projects as well as EPC contracts from concept to commissioning. The partnership entails working synergy among the entities for various sectors and new age projects in the sphere of urban energy, water management, urban transport and infra and township development. Now RITES will offer consultancy and project management services from conceptualizing, planning, designing, cost estimation to tender documentation and other pre-construction activities, while on the flip side NBCC will offer its expertise for project implementation such as tendering, contract management, construction, supervision, cost control, quality assurance, as well as handing over and commissioning and the defect liability period as well. So those are the roles that NBCC and RITES will play in this MOU that they've signed. NBCC pretty weak, but RITES holding on to sharp gains of 2.4% today.
Alright, that's NBCC and RITES for you. But Chandan, you picked out Titan for us. In fact, just today Titan is gaining 3%. You know, it is hitting its a 5-month high on the back of decline in the gold prices that we are witnessing. In fact, this stock hasn't done much in the last 6 months. It's only in the last 1 month that this stock has really started picking up steam. Tell us, what are you seeing on the charts for this counter?
So we have seen a major consolidation breakout on the daily and the weekly chart in the counter, and it has managed to surpass a multiple barrier of 3650, 3680 zone. and the puts are gradually shifting higher. If you look at the derivatives data setup, the longs are being built apart from the coal unwinding. So momentum could be there, and I believe most of the gems and jewelry stocks are likely to be in focus. So one can hold the long position with support of 3650, and Titan has all potential to scale up towards 3850 to 3900 levels.
Those are the levels that Chandan is spotting for Titan. But Gaurav, you picked up Glenmark Pharma today, and we did speak about this earlier. But tell us why this stock is in focus.
Pharma is in focus because company had earlier reported for deferred prosecution agreement, which was there in August 2023. Now the Civil Division of the United States Department of Justice has concluded its False Claim Act, and they have given the settlement. They have agreed for the settlement with Glenmark Pharma, which is situated in USA. As a part of this agreement, the company has to pay around $25 million over the next 6 installments and in 5 years. Now this settlement does not contain any kind of admission of the liabilities by Glenmark, except to the extent already admitted by Glenmark in August 2023. Now deferred prosecution and on the back of this deferred prosecution agreement, we have already seen some positive news flow coming up in the stock, and as a result we are seeing the stock is up almost by 1% in a day to day.
Okay, so on that note, thank you so much, Gaurav, for taking us through Glenmark Pharma. But let's also talk about a stock that wasn't doing very well in today's trading session on the flip side, and that is Uno Minda. And this is on the back of a Kotak note coming in. They've downgraded the stock to a sell rating from an ad rating. They've cut the target price to 970 rupees from 1000 rupees, and the stock is also lower by 2.7%. Earlier, it had actually managed to gain a little in today's trade, but has pared all those losses and is once again near the lowest point of the trading session at 2.7% lower. Now, Kotak believes that this is a speed bump, and slowdown in passenger vehicle segment will be weighing on growth, and this is a major speed bump coming in for the company. They also say that new product additions and capacity ramp-ups will weigh on margins going ahead, and multiple partnerships will be driving content growth over medium term. And they're also saying that the risk-reward turns unfavorable at the moment in their view for Uno Minda, and on the back of that they've downgraded the stock to a sell rating, cut the target price to 970 rupees per share, and the stock is lower by 2.7%.
Right, Chandan, PFC, Power Finance Corporation, is what you picked up for us. In fact, power finance companies are doing very well. In fact, the last few weeks, it has really picked up steam. It is up almost 10% in the last few weeks itself. Tell us, what is the upside that you see for PFC?
Yeah, so we have seen a decent recovery last 10-12 days in the counter, and now from last 4-5 weeks, it has been making higher top, higher bottom. It is near to a key level of 565, 570, and a small follow-up could lead towards 590 to 600 zone. So one can hold the long position or can add more with support of 550. We are looking for an upside target towards 590 to 600.
All right, with that, it's time for us to slip into a short break. But before that, in an exclusive chat with ET Now, Sanjay Kukreja, partner and CIO of Shares Capital, shares his sector calls, the themes he thinks would play very well in the long run. Let's go across and listen in to the excerpts.
I think there are a couple of sectors that saw a slowdown, but if I think about looking at the future, right, I do see a pickup in IT services. I guess the demand environment starts, improving here on. Is it the absolute bottom? One can never call that, but I think the commentary is definitely improving, and the demand outlook seems to be improving on the IT services side, pharma, and BPO as well. And so I think deal making on that side will pick up coming years. New economies also sort of bottomed out and started to see somewhat more traction now. So overall, I do see a reasonable pickup this year in deal activity. Albeit we didn't see much of a slowdown last year either, just to caveat that out. So I think from an investment outlook perspective, I would say certain sectors, the growth and the outlook is actually improving quite a bit. I would say pharma healthcare continues to be in the sort of solid position in India. There's tailwinds of growth. Penetration is still increasing. Lots of different categories that are still underpenetrated. I would say the same for financial services. You look at things like General insurance or health insurance in the country is still very underpenetrated. Room for growth over multiple, decades to come in the future. So those sectors, I think, will continue to get a lot more traction in the next, year or two. I think IT services starts to see improvement. It has been in a little bit slow period in the last, 2 years. Starts to see improvement in the coming year and year forward after that as well. That would be my expectation. I see a lot more traction on financial services. Even though the markets have been on a tear, I think financial services have generally lagged a little bit. Our historical experience has been the opposite, actually. When the economy does really well, financial services ends up doing really well. So I do expect there's to be some catch up, and optimism around financial services that may play out. We are seeing a lot of traction in consumer as well, on QSRs, on certain brands that we are seeing on the consumption side in India as well. I think as India gets richer, consumption is actually, going to play out. I think it's been a slow consumption year again. In the last year or two, it's been relatively slow. Lots of theories around why that may play out, lots of conjecturing. But I think there's again catch up that we expect will play out in the next year or two. So IT services, consumers sort of start moving into faster growth in the next couple of years. I think you have pharma and healthcare continuing to grow robustly, and financial services has a sort of a little bit of a catch-up play. So those would be my calls for the next couple of years from a sector mix point of view.
Welcome back. You're tuning into Market Fatafat, where we are taking you through all the stocks that are in focus today. Coming to you, Gaurav, you've picked out Kalpataru projects for us. This one is trading with cuts of almost 1%. Tell us what's the news flow. In fact, now it has turned a little flattish. It has picked up from those 1% losses and it's recovered a little. But tell us what is weighing down the stock.
When we talk about Kalpataru project, today we are seeing some kind of pressure building up on the stock price, and there are two reasons behind this. So the first one is that the company had given some loan to its wholly owned subsidiary, which is situated in Brazil. Now the company's board has approved the conversion of the outstanding loan granted to Kalpataru Power, which is situated in Brazil, and to turn into equity shares. Now management believes that this conversion will further strengthen and consolidate the financial position of the Brazilian subsidiary. And at the same time, another news flow which is coming up is that the board has now proposed to prepay the NCDs worth 150 crore rupees as a part of the strategy to recalibrate the debt portfolio. Now both these news, when we talk about the stock price, have reacted in a negative way because it seems that the shareholders have not taken both these news positively. As a result, we saw the stock went down almost by 1.5%. Now there is some kind of a recovery coming up in the stock price, but definitely Kalpataru project is staying under pressure in a day-to-day.
Projects down almost 0.3%, but let's also talk about another stock in focus, not on the back of one or two, but on the back of three reasons today, and that is Sona BLW. The shares soared as much as 4% initially, but as of now, it has pared all of those gains, but still managing to hold with gains 1% higher in the green. The company has set the floor price at rupees 699.01 per share for its QIP, which is its qualified institutional placement, to raise 2,400 crore rupees. The second, the company may offer up to a 5% discount on this price as well. And the second reason why the stock is in focus is Sona BLW Precision Forgings had informed about the PLI approval for the hub wheel motor yesterday after market hours. So that also gave a fillip to the stock today. But well, the third part is that there was some chatter about Sona BLW being in talks to acquire the rail engineering business of Escorts Kubota. The company has, however, clarified that the news is speculative in nature and no material information requires disclosure on negotiations with Escorts Kubota. So on the back of the last news flow, the stock did take a bit of a dip from its initial morning gains, but nonetheless managing to hold on to 1% gains as of now.
All right, moving on to the other counter that is in focus today, and that is Wipro. Wipro is in Focus today on the back of a note that Citi has come out with. It is in fact trading with gains of over 1% right now. It is a note by Citi that says that they have opened a 90-day positive short-term view on the counter. In fact, Wipro has underperformed the IT index by approximately 15% since the early July, and it trades at around 25% discount of the IT index. So close to 3 years low is what Wipro is trading at, and Citi thinks that they could be a catch-up on this particular counter, and on the back of that, Citi has initiated a note on them, and on the back of that, Wipro is trading with gains of over 1%.
All right, well, let's keep it going with the IT names then. And Chandan, you've picked out Coforge on the charts for us. IT, if you take a look at that index, last couple of trading sessions, it's been outperforming the other indices, holding up strongly. Do you think this is going to reflect for Coforge also going ahead?
Coforge has been moving in a rising channel and respecting well above its moving averages. On weekly chart, it has given a breakout from a cup and handle pattern, which is bullish implication. So entire sector is doing well, and Coforge is one of the strongest counter. So we believe this momentum could continue. 6,300 is immediate support, and with this support, the momentum could scale high towards 6,850 to 6,900 level in the counter.
All right, Gaurav, coming to you then. Max Financials, there is a note coming in by Investec. Tell us, what does the note say?
Yes, Max Financial is in focus, and now this is the reason being that Investec has now maintained buy rating and a target price of 1400 rupees on this counter, and the reason being that the recent acquisition and the developments happening in Shriram Holdings. So Shriram Holdings has now seek for an application and permission to merge Shriram LI Holdings and Shriram Life Insurance Company, and this is a similar case when we talk about Max Financial and Max Life. Now NCLT is on the opinion that the holding company can actually merge its subsidiary in a life insurance company. When it comes to Shriram is yet to be merged and be approved by the IRDAI, but what Investec believes that this decision is going to be a key, and the reason being that if Shriram gets merged with the Shriram Life Insurance, this will set a precedent for Max Financial as well, so that we can expect Max Financial also to get merged with Max Life Insurance, and thus this can actually simplify the structure for both these companies. As a result, they have maintained buy rating, although when we talk about the stock performance, it seems there is some pressure building up in this trading session, but definitely watching out on Max Financial Services on the back of this new discovery and very unique discovery that we have got from the Investec.
Okay, so on the back of Investec note, actually the stock is not doing pretty well, but while we're talking about financials, let's also go across and listen to Sandeep Tandon of Pont Mutual Fund. He says he's cautious on private banks, but also adds that HDFC Bank is no longer a part of their core holding. Let's go across and understand the rationale behind that move.
We have been quite, I will not say bearish, we have been cautious on the banking sector, particularly private sector, because we always believe that derating of the sector has begun globally. Okay, so when we talk about derating from a valuation perspective, because we believe banks are the byproduct of leverage economy, and leverage economy as a concept is going to deteriorate. Okay, and US is a very classic example. So multiple data points. Now you look at even India centric, the credit growth has been marginally impacted. If you look at one of the largest public sector bank actually talk about 14-15%. None of the private sector boards talks about this sort of growth coming. So there are challenges on the deposit front. Cost of collections or the cost of credit cost has also moved up. So if you really look at it's a combination, we are from a now valuations are always absolute and relative. You know, on absolute terms, people say obviously it is cheap. But looking at relative to other sectors or relative to the global market, I think the perspective is very different. So neither we are very aggressively bullish nor we are bearish. We think at appropriate opportunity in liquid names like private sector names, if I get opportunity in extreme inflection points, I will be buyer, and extreme inflection points, I will be seller. So they are no more a core holding for us. They are more of a tactical bets which we keep on playing, and HDFC was a classic example of that trade.
All right, moving on to the pharma space then. Chandan, you have picked out Alkem Labs for us. Pharma seems to be in a good stead, in a sweet spot, and in the last 1 month, in fact, this counter that you picked out, Alkem Lab, has done pretty well. It's seen gains of over almost 19%. Tell us what is the upside, what are you seeing on the charts for this one?
Yeah, so Alkem is one of the strongest pharma name, has been making high tops, high bottom from last 5 to 6 weeks. And recently it has given a pole and flag breakout above 5800 zone, and after that momentum is clearly scaling higher. So one can hold the position or even can add long with support of 6150, and we are expecting this recent move to continue till 6600 zone.
That was the last talk on this edition of Market Fatafat. Thank you so much, Chandan, Gaurav, for joining us on this show. But as we wrap up on this edition, here's a teaser of a new series, Emerging Titans, where we will bring you insights into companies that could be the next big thing. And we are kicking off the edition with the RPSG group, which has seen meteoric rise over the past few years. And Chairman Sanjeev Goenka expects this trend to continue across businesses. His son and vice chairman of the group eye for huge amount of growth, both in top line as well as bottom line across each of the businesses. Let's go across and listen in.
If you're looking at the next 5 years,
Yeah.
I think there's intense growth across all our verticals. And we are not looking to grow incrementally, we are looking to grow exponentially. And every sector, that's the kind of numbers we have, that's the kind of capital expenditure we've committed to. So whether it's PCBL, whether it's power, whether it's entertainment, whether it's chemicals, whether it's IT-enabled services, we're just looking to grow exponentially everywhere. We have the building blocks in place. Now it's for us to go ahead and execute those plans and make sure we get there.
And that execution is something that the ball gets in your corner. So what's your plan for the company, let's say 10 years you're out? Because as he said, the foundation is well laid. You have to just take it off from here.
Absolutely. I think the foundation is extremely well laid. And as Dad pointed out, I think we have looked to reinvent all of our businesses, you know, whether it's power, whether it's chemicals, whether it's entertainment, whether it's IT-enabled services. And as we look at it over the next 10 years, you'll see a huge amount of growth coming both in top lines and bottom lines across each of these.